just sold the close there, looking for 20 cents, stop above the high, and sold 5 shares. I'm only going for 20 cents here. I feel like I could get a little bit more, but I'm already feeling like I missed a few trades, so I feel like I'm already a little bit antsy. My reasoning for this trade is we had a big sell-off early, consecutive climaxes up, high in a trading range day. So typically in these kinds of situations, when you get a huge sell-off open in a trading range, even if we get up to the high, we have to go sideways here before breaking above the high. And so that reason that we probably have to go sideways, typically have to go sideways, but also the way that we got up to the open of the day and the high with consecutive climaxes, I thought it'd be okay to sell here, selling high, betting on sideways to down for at least 10 bars before breaking above the high. So I feel like it was a safe sell. Conservative profit target. I feel like I could go for more, but I feel like I was already feeling a little bit frantic here, missing trades. I felt like I was missing trades, and then having it go in my direction a few minutes later made me feel a little bit frustrated. So right now I'm just trying to get my first trade in, take quick profits if I can, and then once I calm down a bit, look for something else. All right, just got out. Made $1, 5 shares, 20 cents. And so, like I was saying, on a trading range day, big swing, so big swing down, big swing back up. We test the open of the day and come near the high. And so typically in these situations, when you come back up after you reverse the opening sell-off, we have to go sideways up here before we can get any type of breakout. And today I thought it was more likely because of the way we got there with these consecutive buy climaxes. So I thought selling up here was okay, selling at the open of the day when we faded. I sold the close, looking for 20 cents. I thought 20 cents was conservative, but it looks like it wasn't, because as soon as we got to 20 cents, we reversed up. And so here's an example of what I was looking for. So here, similar, we open at the high of the range from yesterday. So high of the range from yesterday, low of the range. We open, we sell off to the low of the range, then break out strongly. So here we open at the high of, so we entered a trading range on September 6th. So we open at the high, we rally to the, we sell off to the low, and then we get a big breakout to the downside. And so here today I was looking for a double bottom and a bull signal. I thought this might be by the close, but I didn't want to, I thought I was being too aggressive if I bought that. I should have waited for a signal bar, which I was waiting for, didn't get it. So I missed this. I was looking for something like this. Micro double bottom, good signal bar for rally back up to test the high in a trading range. So we didn't get that, so I felt like I was missing a lot of trades in here, but it just didn't match my setup, and it was going higher, but it just didn't look like something that I should be taking, so I didn't take any of those. But we got this, so on September 7th, we got the rally up to the highs, and we need to go sideways here. Here we break down, but I knew that sideways was likely, and today was even more climactic than today. Today was even more climactic than September 7th. On the 7th, we got this one climax, but today we had multiple, and we faded at the open of the day, so I thought that was an okay sell to close. So another example is like here. So August 24th. So open at the upper end of the range of the day prior, and then at the lower end of the range we break out, strong move down, micro double bottom. That's what I was waiting for, and the buy signal above here. So we didn't get that today, as cleanly at least. There might be a buy above here, but that's just not something I'm comfortable with. And then we rally up to the upper end of the range. We have to go sideways first, and then here we broke down again. So again, today I thought was more climactic than both of those examples with the consecutive buy climaxes. So I thought at least a little bit sideways before getting any significant breakout. I have an order to buy a pullback here, but I'll be quick to exit if it doesn't go my way right away. I was going to buy the low of this bar, but decided to buy 20 cents lower instead. So looking for 20 cents up to test the low of this bar. But if we start to accelerate down or get a bear bar closing on this low, I'll be very quick to exit. Okay, I'm long there, looking for 20 cents. If this bar closes on its low or starts to accelerate, I'll be pretty quick to exit. All right, we just hit my target. So if we come back down, okay, I ended up exiting there. Hit my target twice and to the cent and didn't fill me. So decided to exit there as we fell. So lost 30 cents there. We got up to 09 a couple times, and I was considering exiting, moving my my target order down by a cent to get filled on the next time up, but I think there's just too much decision making there for me to do that. So I was just allowing it to get hit where it was, and then exited as it came back down to my entry price. So we did end up getting that second leg up, and we got up to my target. Eventually, on the next bar, I exited down here after this bar closed near its low, but this is actually just a 50% pullback. So nothing too aggressive to the downside, but I think I was quicker to exit because it was a cent. It would just touch my target twice, and then reverse back down to my entry. So I didn't want that near winner to turn into a loser and then have it reverse on me. So I think had it not gone up to my target first, I probably would have been more patient with it. But because we got there and came back down to my entry, I'm okay with the management of getting out break even there.